Welcome back, everyone, to Tech Tune Up with me, Paul Meeks. Haven't seen you for a couple of weeks. I'm pumped to be back. We have a ton of stuff to cover in the sector. So without further ado, let's get after it. And remember, as I'm going through my commentary, please, if you have a question, reach out to us right now as we go through the program. And at the end of the show, I'll try to answer as many as I possibly can. So first of all, I'm always looking for stocks, not just for what they say about themselves when they report or otherwise announce news, but also what are the tells broader for their industry group within the tech sector itself, and sometimes even more broadly for the market. So I want to start off with Google. Reported a pretty good quarter last night, but like anything in life, there's always a mix of good and bad. The good was the Google Cloud business up 35% year over year. It is getting a nice boost because it's helping support all these large language models. And they must, even though we don't have all the competitive data in yet, they must be taking market share from Microsoft Azure and also Amazon's AWS and maybe even OCI, Oracle Cloud Computing. So that's really good, 35%. That's a nice acceleration. And the problem is, or the negative side of the ledger, is their core digital advertising business only grew 10% year to year. That's not great shakes. Makes me a little bit worried about what Meta will say tonight, because obviously digital advertising also brings that company to the dance. The last thing I'll say about Alphabet, as per its results, is they are using AI and realizing cost efficiencies, not being sold in products to others, but within their own organization. And the nice thing about that is, over the last year, their operating margin has expanded by 300 to 400 basis points. And so that's a nice use case of the efficiencies of AI within Alphabet itself. The last thing that's in the news, Alphabet made a big investment in a large language model company called Anthropic. So did other US companies. But they're not getting any pushback on that from regulators in the States. They're getting pushback on that from regulators in the Eurozone. So it's a mix of good and bad, but the way I look at it is the good outweighs the bad in this case. And even with the stock up today, I still would buy it right now because I think it's going to go higher. This was a stock that actually underperformed the Mag 7 for quite a bit. Next stock, AMD, Advanced Micro Devices. Unfortunately, a pretty sour tale here on its quarterly result last night. It sucked, and they made the numbers, but they only made the numbers, no upside. And they guided to making the numbers next quarter, but no upside. And when you're a stock that is priced at a high multiple and your stock has been on such a run, you must give investors, every time you report quarterly earnings, a steady diet of what we call meet and beat. And they just didn't beat enough. The problem with AMD, and the reason that if you want to play AI infrastructure building through semiconductors, even at a richer valuation, I still go with Nvidia, is because Nvidia is a pure play. Problem with AMD is, yeah, they have a great AI accelerator chip business, going to do $5 billion in sales this year. But unfortunately, their legacy business is a pretty crappy, at least right now, CPU business where they're selling their chips into PCs. So why go with the blend of good and bad when you can just get all good, because Nvidia is much more of a pure play in the good stuff. Here comes Microsoft. They're going to report. I don't have enough confidence in Microsoft to add to my position ahead of the quarter. I think based on the explosive growth that we saw in Google Cloud last night, that Microsoft may have lost some share in their Azure business. And so slightly cautious. What I'm looking for when Microsoft reports is, they have a relationship with OpenAI. They own 49% of OpenAI, but OpenAI right now is formatted as a nonprofit entity. Of course, you cannot raise money when you're a nonprofit entity, and OpenAI is growing so fast that they need to do that. So they're transferring their structure to a for-profit structure. What happens to Microsoft's ownership stake when they do that? So they're going to have to address it. If they don't address it on this quarterly's conference call, they better do it soon, because it's happening and it's a big, big deal. Similarly, I'm not too bullish on Amazon going into their print. Again, the same thing goes. I think they might have lost some share to Google Cloud with their Amazon Web Services business, which is the business, not the e-commerce business that's low margin. It's the higher margin AWS business, which really drives investor interest here. Next, Apple's coming up. Remember a couple of months ago, all the bulls on Apple said this Christmas, right? This Christmas, coming up pretty quick, that there is going to be what the bullish analysts on Wall Street called the mother of all iPhone upgrade cycles, based on Apple having Apple Intelligence or AI on board on the phone. Well, they're rolling out the AI functions kind of slowly and deliberately. So I don't think anyone is going to be that jazzed to update their iPhone this Christmas for that reason. And the problem is the stock has been on a big run based on that premise. I think it's going to disappoint. In the meantime, Apple really hasn't grown for several years. They need a kicker, and they need a kicker from their iPhone business, which is still about 60% of sales. So I'm staying off that. At some point, once the momentum gives up the ghost, I might even short some Apple. Yes, I know that sounds sacrilegious for a tech analyst. Meta coming up tonight. Meta, even though I'm a little bit worried about digital advertising this quarter and what they say about the guide based on Google's own commentary last night, Meta is doing all the right things in all of its business units, while it's still trying to monitor its costs. And so out of all the Mag 7, the only one that I'd be tempted to buy ahead of its quarterly report this week is Meta. I'm sticking with my Trump media short idea, though it's very difficult to short a stock that has such a small float. But here's how I think it plays out. So we have the election in 6 days. If Trump wins, the stock will soar, right? Because it's Trump media. If Trump loses, the stock will probably crater. But then we'll know that his political career is over. So I might short it either way. If it soars, if he wins, then I short it at the top. And if it plunges because he loses, I short it anyway. So anyway, I've been thinking about that. I also, have been poo-pooing Tesla. Tesla had that big We Robot event in Hollywood a couple weeks back. I don't want to say it's much ado about nothing, but I wasn't that impressed. And then they announced a quarter, and in their quarter, they did have some upside, but I'm just not there with Tesla. Even Musk himself says, do not buy Tesla as an EV company anymore. Buy it based on the fact they are going to dominate autonomous driving. I think Waymo is going to be number one in autonomous driving. That's a piece of Alphabet. And so Tesla at some point is a short. Just not yet. As we talk about Tesla and Elon Musk, he is raising a bunch of capital to fund his AI startup called XAI. And it's actually getting some love because the valuation in this funding round puts this private company, which is minuscule, at a $40 billion valuation. We'll see if that's worth it. Nvidia, I've told you that continue to like it. I can't buy Nvidia here, right, after it tripled last year. And then the stock has tripled so far 2024. And we won't get another input from a quarter for Nvidia for another month or so. So we won't get anything fresh. But I do know for a fact the momentum is very strong. Don't like AMD, and I like Nvidia in AI. It's more of a pure play. And so don't be dissuaded by AI's stock reaction today, AMD's stock reaction today, or any commentary as a look through to Nvidia. I think they're quite different, actually. Uber reports this week. Be very interesting to see what Uber says on their call about all of the bad mouthing that Elon Musk gave that particular company at the We Robot event for Tesla. You know, Uber is saddled up in autonomous driving with Waymo, AE, Google. Cadence Design Systems is interesting. It is a oligopolist in electronic design automation software for engineers to design semiconductors. I don't like Cadence, but they had such a good quarter that they're getting me reinterested in their oligopolist partner, which company I like very much, Synopsys. So here it is. Cadence has a good quarter. I don't buy Cadence. I buy Synopsys. SK Hynix. This is the South Korean company that dominates high bandwidth memory. Remember, that is my whole impetus for owning Micron. They just announced their quarter, and the high bandwidth memory business is awesome. And they're also arguing for even further acceleration. This has to be a nice look through to Micron, which has been on my buy list for a while. CrowdStrike has actually had quite a rally. I'm a little bit surprised because they're the ones that had the software glitch that blew everybody up a couple of months ago. And they claimed at that time that their damages were going to be limited to $60 million. Well, that's interesting because just this past week, only one of those customers, Delta Airlines, has sued them for $500 million in damages. So here's what happens. This is going to go through the courts. If Delta wins, all of the other customers that lost business during the IT outage caused by CrowdStrike will say precedent has been set, and they'll sue CrowdStrike too. And these claims could get in the hundreds of millions, if not billions. So hold the phone on CrowdStrike. If you want to play cybersecurity software, you know, on my list instead is ticker symbol S, Sentinel-1. So that's what I'm thinking about. Let's now move on to some tech picks. As always, try to be value added, right? We only have certain time together. Here's my list. The green stocks are my fresh money buys. Yes, I would buy them today. Red is a stock that I've sold. Yellow are stocks that are on the buy list, but I'm kind of waiting to see what goes on. You know, most of these companies are going to report quarterly earnings and give guidance. Why would you trade a stock ahead of a fresh download of data? So let's go through them quickly. Micron, I love this SK Hynix tell about high bandwidth memory. T-Mobile has been a great stock for me, but I sold it recently purely based on valuation. No loss of confidence in the fundamentals. Microsoft, I mentioned, a little bit squirrely about the quarterly report, waiting to see what happens. Meta, I would buy ahead of the quarter. Amazon, also show me the quarterly report. Synopsys, Cadence results were good enough for me to double down on Synopsys, its competitor. Nvidia goes without saying. Broadcom goes without saying. My top picks in AI infrastructure semiconductors are Nvidia, Broadcom, Taiwan Semiconductor. Dell is kind of interesting. Supermicro has blown up, so it might be a opportunity for both Dell and Hewlett Packard Enterprises, HPE, to gain some share in data center servers. Taiwan Semi, Netflix had a great quarter. If you're going to play video streaming, just hold your nose and buy Netflix at any price and stay away of all these other legacy media companies that are trying to convert themselves. Alphabet, I commented on. I do like Alphabet today. I'd actually been on the sidelines for a while, but yeah, even though the stock's up big today, buy it now. Arista Networks, we'll see what happens. Sentinel-1 is my favorite play in cybersecurity software. Palo Alto Networks, Tuya, my Chinese stock. I only buy it at the low end of its range, $1.28 a share. Oracle, I like. Stock's a little expensive. Guidewire, I like. Stock's a little expensive. I think ASM Lithography, the Netherlands-based semiconductor capital equipment company, is pretty interesting here. It has gotten under $700 a share, in which I've become very interested in it. And specifically, its low over the last month or two has been $683. if you have a long-term perspective, because the company does have some short-term problems that are pretty serious, but with a long-term perspective, you buy it at 683, you will be thanking me a year or two from now, because they dominate the manufacture of EUV semiconductor capital equipment, extreme ultraviolet. And that is the only technology that allows you to cram more transistors on a silicon wafer, and it's absolutely necessary for the worldwide global semiconductor industry to go forward. They need that technology, and they're the only guys that got it. So sooner or later, they're going to resolve their problems. This is kind of interesting. I've been looking for data center build out plays that are indirect plays in which the stock hasn't already exploded. Here is a company called Williams Companies, a big player in nat gas, and they are going to be the energy solution for more than its fair share of data centers. So an energy stock coming to you from a tech analyst, kind of interesting, and a way to play it. Next, this is a very interesting play that came up in our Wall Street Beats discussion this morning. I'm the tech analyst, but another analyst who's very well regarded on the street, her name is Nadine Turman, likes Olympus, and OLYMY is the ticker symbol here in the States for the ADR, American Depository Receipt, for the Japanese company Olympus. So this is kind of interesting. The stock's off a little bit. Why? Because their CEO got booted for taking drugs. I guess that's a no-no in corporate Japan. If it causes any weakness in the stock, this is a buying opportunity, because this company dominates those small cameras that they use in operating rooms. And it's a really good business. It's essentially a very visible annuity business. And let's take advantage of this controversy and look at Olympus. And that's a stock that I'm sure you have never heard of. And then lastly today, this is interesting. I, in the past, have poo-pooed Reddit. Right? I thought it was going to end up when the company went public, just like Snap and Pinterest. Nobody would give a shit in social media that it was game over in favor of Meta. Well, this is kind of interesting. Reddit has shown me that they're more advanced than at least the other second-tier competitors in AI. And they announced an unbelievable quarter last night. And I think their numbers are going to go up and up and up. And even though the stock is up a ton, it is up 40% today. And the stock's now at 115. I actually think it can go to 120 to 150. So maybe you don't buy it today, but the next time it weakens, with a 2-year $150 target price, probably should play it, right? So anyway, yeah, I know when I'm wrong. When I get some new evidence, I'm always changing my tune if it's significant enough evidence. And I think Reddit is kind of interesting. Showed me up. That's cool. Now I want to embrace it at the right price. So finally, let's end up with some tech trends. Of course, the elephant in the room is what takes place in 6 days' time, right? We're going to elect the president of the United States. As it pertains to the market and as it pertains to the tech sector in more specifically, I would say that, and I've taken a look at the policies that impact me and my investors the most, there's pros and cons to both candidates, right? Trump, I don't know if he knows what cryptocurrency is, but they have backed his campaign, and so he's going to show a lot of love for crypto. On the other hand, candidate Harris wants to very aggressively help bootstrap small businesses. And of course, a lot of small businesses in this country, the innovators, are tech companies. So we'll see. I don't know as it pertains to the market and the tech sector in particular, if there's going to be landslide stock move either direction for either candidate. Now, this is very interesting. So the election's on November 5. Only 48 hours later, on November 7, the Federal Reserve Board, our central bank, meets again to talk about lowering interest rates. And the CME FedWatch tool is telling us there is a 98% chance, so yep, it's going to happen, that interest rates will be lowered again by 25 basis points on that day. But what happens if there's some post-election mayhem? Will this impact their move? We'll see. What I would say is, even though I don't think over time there's that much of a delta between the tech-related policies of Harris and Trump, this election, and it's only 6 days away, you probably should hold off investing aggressively because, yeah, at least overnight or the next couple of days, we could have a lot of volatility, and it could be volatility to the downside. I just don't know. And I fully expect that the election will be contested, and we may not even know who the winner is for weeks after that. So we'll see. The last thing I thought was very interesting, we've been talking on this program about, the AI infrastructure build, particularly the arms race as it pertains to building out data centers. Well, now the smartest guys on the block, the private equity investors, are getting in on it. So Colbert Kravis Roberts, KKR, one of the big names in private equity, partnering up with others that are focused on the space to spend $50 billion on data center build out. So now everybody and their brother is in this mix, public and private. So those are the tech trends. Obviously a lot of stuff is going to be resolved in our lives in about a week's time. But in the meantime, if you have any questions before I conclude, let's address them now.
Just giving it a quick second to see the questions come in, Paul.
Okay.
I think I saw one earlier. I'll put it up on screen.
Okay.
I know you went over it earlier, but I'll just bring it back up so we can just go over it again real quick.
Sure. Okay, why the AMD decrease? I think you're talking about AMD's decrease in stock price. So the company announced their results last night, and they were in line for the quarter and with their guidance for the next quarter for both the Wall Street consensus estimate for revenue and earnings per share. But the problem is, after the run that this stock has had, particularly as it's seen as at least a secondary AI infrastructure play to Nvidia, you cannot report an inline quarter. You cannot give inline guidance. You got to upside a lot, and they just didn't do it. And it wasn't because of their losing a step in AI accelerators. They upped their guidance for the AI accelerator revenue this year to $5 billion. The previous guide was $4 to $4.5 billion. But the problem is, the story with AMD is, yep, it has some really good stuff pertaining to AI, and yep, it has some really bad stuff, which is their CPU business, because those CPUs mostly go into the very mature PC market. So even though Nvidia is more expensive, it is a pure play in AI infrastructure build out. And if you are going to buy an AI semiconductor company, I avoid AMD and I focus on Nvidia, Taiwan Semiconductor, and Broadcom. How do you feel short China? China had a little bit of love recently, long time coming. Now the stocks are coming back a bit. I would not short China. Also, of course, there could be some real volatility in not just the U.S. market, but the Chinese market come November 6th after the election. So we'll see what happens. But as of now, I would not make a aggressive bet, either long or short, and then come back to me after the election the next time we broadcast this program. What is your thoughts on Palantir? Yeah, so I used to poo-poo Palantir. Hey, but I'm an analyst. I'm looking at stuff all day long. And I must say, I'm now more positively inclined to own Palantir. One of my problems with it when I was down on it was, one, their CEO is a nut. Still feel that way. Still think it's a negative. But this company was too beholden to government contracts. And I must admit, they had a very nice quarter last quarter where their revenue mix, their diversification expanded to some important corporate customers. And every quarter, I'll take a look at that. But as long as their corporate business continues to expand and we have a more balanced revenue mix for that company, I'm actually thinking I want to buy it. Do I want to buy it now? No. But I have been covering tech for decades that I know even with my favorite ideas, I always get at least one chance to buy them lower. That's just the nature of the beast. And so, yeah, I'm now more favorably inclined to buy Palantir. It's not going to be on my, top of my list. I've already told you who those stocks are. But yeah, more bullish now on Palantir. You mentioned natural gas. Okay. So, yeah, we know that there is a voracious demand for energy that cannot be fulfilled from the current grid in the United States to build out these enormous data centers. Like if you build out a next-gen data center, right, a significant data center, of which the plan is to build many of these, that data center is going to have to create enough energy to turn all the lights on in San Francisco. That's the magnitude of these projects. So yes, all clean forms of energy or cleaner forms of energy are going to be in the mix, including nat gas and nuclear. Now, if you want to play nuclear, the plays there are Vistra and Constellation Energy Group. I own them both, but they're pretty expensive. I kind of like this back way, indirect way to play the build out through nat gas, because nat gas is going to be an important energy source too. And so I came up with Williams Companies, WMB. But it's kind of my chicken shit way to get in because all the other more obvious plays have exploded and I just can't stomach buying any more. I'm already in them. Can't stomach buying any more at these elevated prices. Any opinion on Rambus? I probably should stay away from that. I know the company. I've been around forever, but I don't want to give you the impression that I'm following it closely. Some companies I follow very closely, but not that one. What to look for in 2025? I think the big driver is for the tech sector, as you've heard me say before, I am not that bullish on AI-centric apps, right? AI products that are sold elsewhere. I think this AI infrastructure build, which really is putting Nvidia chips in data centers, continues for another year or so. Some people thought that the last couple of years would be the infrastructure build, and then by this time in the cycle, we would move on to the next. I actually think the infrastructure build takes another year or two, and so I am still focused on that. And the key thing to watch is whenever the major hyperscalers, companies like Amazon and Microsoft, give their capital expenditures budget for next year, they've been spending a ton of money on this. We just have to hear that they're going to continue to spend a ton of money on this. And then when you peel back the technology onion, you still want to be in the, Nvidia and some of the other infrastructure plays. The other thing I look for is for next year, I'm really interested in who's going to be the president of the United States. We'll find out. And then also, what is going to be the trend of interest rates? Because for risky assets like tech stocks, interest rates go down, stock prices go up, and vice versa. And so we know September 18th was the first time that the Fed, the central bank, lowered rates. They lowered rates by 0.5%. It looks like they're going to lower rates by another 0.25% on November 7th, 2 days after the election. But having interest rates so high for so long, has that caused so much damage to the economy that we're going to have a recession, even though the Fed is already lowering rates? And so, yeah, the path of U.S. economic growth, the path of inflation, the path of interest rates matter much more to investors in aggressive growth stocks that I play with than value companies. So those are the kind of macro and micro themes I'm looking for next year. Well, guys, thank you for your questions. We had some good ones today. And, if you ever have a question between our bi-weekly shows, I'm so easily found. Be happy to chat with you stuff about it. So next time we'll get together. We'll have all kinds of information. We'll have more quarterly reports to talk about. We'll have the President of the United States to talk about. We'll have interest rates to talk about. All that stuff will go down between now and then. So in the meantime, thanks for checking me out. Thanks to my buddies at Benzinga. Thanks to my buddies at Harvest Portfolio Management, where I manage tech portfolios. Let me know if you're interested. And anyway, we'll see you next time.